So as I just mentioned, when will the Fed take action? When will they cut rates again? We know they cut back September last year. They cut a couple of times towards the later half or the second half of last year. There was talk that in June they would cut rates again. And our first chart actually shows some of that talk. Right now, the talk is that they're not going to cut rates. And you can see here that everything should be maintained for the June meeting. Almost 92% now say that interest rates will not be cut from June. However, what we do know that is that that has changed, and that has changed based on, again, trade deals, trade negotiations, trade talk, because just, I guess, 1 month ago, and I don't know if we have that here, just 1 month ago, you could see the target rate. I think we can put up our next illustration. You could see that just 1 month ago, that okay, we don't have it, but I can tell you just 1 month ago, the I guess the percentage that the Fed was going to cut rates was as high as 64%. 64, almost 65% chance that the Fed was going to cut in June. And now we're sitting at let's call it 20%, a 20% chance that the Fed would cut in June. So it's come down quite a bit, and that is because trade negotiations. The fact that why should the Fed cut? If everything is going well, and if we're going to get a trade deal between the two largest economies in the world, why should the Fed cut rates? And our next chart, which we now can pull up, that we just showed briefly, that shows unemployment rates. Unemployment rate, pretty steady, right? You're looking at 4.2%, roughly 177,000 jobs roughly created in the U.S. So we know that the Fed has two mandates: stable prices and full employment. Well, at roughly just over 4% unemployment, you're looking at pretty much full employment. The right-hand side of this chart, non-farm payroll employment, monthly change, and you can see the last few months have really not dropped much at all. A little bit of a drop, but not much of a drop at all. And our next chart shows the other half of the Fed's mandate, which is inflation. You can see the latest inflation, CPI, which came out this week, 2.8% on the headline and 2.3%, 2.3% on the headline, 2.8% on the volatile, or the when you take out volatile food and energy, that you get the 2.8%. So headline is getting close to the 2% number. You're seeing full employment. You're seeing inflation falling to close to the 2% rate. So why would the Fed cut? Well, maybe you'll see the Fed cut if we start to see inflation below 2%. But with everybody anticipating, even with these trade talks happening, inflation, cost of goods in the U.S. rising in the next quarter, let's say the next 3 months, I think that you're going to see the Fed sitting on their hands for the time being. Now the talk is that they may cut twice, but those cuts will not happen until the back half of the year, maybe September and maybe December. So when will the Fed act? I'm going to say probably not to the second half of this year, but obviously the data will tell what the Fed, or dictate what the Fed is going to do.